This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I do have pneumonia. It's been weird because it's like I'll be breathing fine all of a sudden and then all of a sudden my lungs just fill up. So it's been pretty miserable. Besides that, tonight's video will be fairly quick. I'm going to be doing the technical analysis very quickly. So, for December 3rd, I'll be going over the data sets, the SPY, Bitcoin, TLT, and I will be going over Apple as someone requested it. If you ever have a request for any technical analysis, feel free to post it in chat. I have no problem taking a look at symbols if I am feeling, well enough and everything. So with that said, let's go ahead and jump straight into the data. Now, we did not have a lot of data today. We just had Fed member Bowman speaking, but we did have Fed Chair Powell speak last night, and I actually did go over and watch the entire speech. What the speech was about was he was at a college campus speaking with a few other um, educators and leaders in the financial world about a previous it was a memorial service basically for a previous major financial person. Forgot the person's name. I'm sorry. But uh, other than that, it wasn't really anything based on current monetary policy, current Fed policy, anything like that. They specifically said and specifically stated that they would not make any any comments like that. However, and this is the really big however, is that Howell and the other person speaking, I apologize, I do not know the man's name. I didn't really pay attention to that aspect. Um, What was important, though, was that Powell and this man were speaking about the previous Fed chair Volcker when they had that major recession and they pulled the economy out of stagflation and got things back on track. And Powell was very much in agreement that that is the way to do things right. And I don't have the exact quote, but he did make a statement, something to the effect of, um, Volger was willing to take the necessary steps to make the correct decisions, and he was backed, uh, by a political party, Reagan, that was willing to also take the steps with him. And that did lead into tightening of the monetary policy to the point where it caused a recession. And that's pretty much what Powell's been trying to do. He has been trying to take up a book, or, a page from Bulger's book, but we're not seeing that entirely yet. We're still seeing a little bit of strength in some of these other data sets. Some of these other data sets, like the labor market, we have been seeing deteriorating. Um, so we'll see. Obviously we're going to cover it day by day, but that was really what the whole speech was about. It was just speaking about this one economist and their philosophies and what he did for the world and everything. So really interesting economy talk. It just wasn't very key to the current monetary cycle. Other than the fact that Powell really does want to follow in Volger's footsteps. I don't think he'll get that opportunity, but he does agree that that's the stance the Fed really needs to take to correct what's going on in the economy, and that does mean that Powell wants a recession. Because to him that's the clear stance to the correct path. Okay. Anyway, going over tomorrow's data for Wednesday, December 3rd, we have quite a lot of very important data. We again have this new ADP non-farm employment change. It's a weekly data set. I don't know if this is going to be a continuous thing, uh, basically ongoing from this point forward, or if it's going to taper off at some point now that we actually have the government open again. But with that said, it's an extremely key data set. It's basically like the continuing and initial jobless claims, only except it's showing the employment change, or the non-farm jobs anyway. So very key data set, and they're expecting a pretty major pull downward. Okay, so that's a very dovish data set that would cause the yields to pull down quite a bit. That would very, very, very likely cause some equity strength unless the market takes it, as a sign of recession and starts a sell-off. Okay. With that said, that's at 8:15. At 8:30, we have the export and import prices, and I discussed this in Sunday's video, but they do basically expect a 0% on these export and import price index. Now, that's important because this relates to the GDP, as you can plug in the export and import prices into the GDP, and that will, provide you the GDP numbers. Well, when these are expected to come in basically 0%, that's not good. Especially when the GDP is a major narrative and contention point right now. So again, that is dovish. That would pull the yields down quite a bit. Industrial production, 9:15 a.m. That kind of goes with the manufacturing PMI and some of the data we had on Monday, but it's not super, super important. But we do kind of anticipate that the industrial production will be slowing down as the new orders have basically just been on a massive downtrend. So if companies aren't ordering new product, then, you know, doesn't matter if you're industrial manufacturing, you can't produce stuff if nobody's putting in the orders. So we'll see how those data sets are. Now at 9:45 a.m., we have the global composite PMI that came out weird. Yeah, we have the S&P global composite PMI. That's important, but they're expecting those numbers to come in slightly above. That's the producer manager index. So basically, are the managers and producers expecting prices to go up higher slightly? Okay, so that would pull the yields upward. Okay, that would be bearish for the market, but that's not a very high, um, forecasted expectant or expected. I can't talk. My brain is just in pneumonia mode right now. The expected numbers are not that high, okay, compared to the last readings. That's what I'm trying to say. The construction spending, we have been seeing this pretty much downtrending. I don't really expect that to pull upward, but it shouldn't really affect the market too much anyway, and that's at 10 a.m. Now, the big data sets for the day I really think are at 10 a.m., and that's the non-manufacturing data. So, like the Monday manufacturing data, this is the non-manufacturing side of it. So, we get the employment data, the PMI, the prices. This is going to tell us a ton about what's going on with the current economy, what's going on with the labor market. I think this has a ton of weight for the market right now. Now, they're not really showing a forecasted expected rate on two of these data sets, but the PMI they are expecting to be a slight decrease. Okay. Um, for the non-manufacturing side, that basically says the consumer side. They're expecting the consumer side to slow down slightly. Okay. Um, that would pull yields down quite a bit. If that goes below 50, that actually enters contraction. Some of these other numbers have been entering a major contraction area. As you can see, 44, 48.2, and that's the ISM manufacturing, employment, and PMI. This is the non-manufacturing side. So we have been seeing downtrends in these, and this is again all tying into the labor market deteriorating and everything else. Now, for Thursday, we essentially mainly just have the jobless claims and the Fed GDP. Um, but we will go over that and go over, what all the data sets came out tomorrow for. So, yeah, that's the data. I'm sorry, my words probably sound like a jigsaw puzzle, but it is what it is, and let's get into the technical analysis. Now, really quick, I did want to just cover the data notes. I have not changed this for the last couple days now. Basically, if there's no necessity to remove a note, to change a note, then it will remain the same note throughout each video unless, again, there's a need to update it. So, um, like the market plumbing, we're still seeing liquidations going on. We're still seeing concerns in the market that potentially, we could get a very, very large sell-off due to the whole collateral crisis I've been outlining in the last few weeks. Um, so as long as these are our potential or just important things that I still want in the video, then they will just continue to stay on the side. So if you don't see this updated each video, then that's why. It's not me not wanting to update it, it's just I won't be updating these unless there's an actual necessity to add something or remove something. So okay, let's get into the technical analysis. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And going over the SPY technical analysis, as always, let's go ahead and turn on the daily time frame. Let's turn on our moving averages and Bollinger Bands, and let's get into it. So today we did have our 5 mod test that we discussed in last night's video. We did have the market pull down. Let me go ahead and adjust this chart so that it shows it properly. But when it pulled down into this area right here, it was able to actually test the 5 mile correctly. The 5 mile today is currently at 679.98. I know on your side it might show, I believe I wrote 680.8. Um, so we should see a very slight increase in the 5 mile tomorrow. But with that said, um, 5 mile has been tested. Okay, so with the 5 mile being tested, that means that by all technical standards, we have the full ability to either move up to the upper Bollinger at this point. So again, that would be basically a whole about $10 to $11 move to the upside, or we could head back down and retest the 20 mile. And I'll go over that in just a second, but that would be basically a $9 downside. So it's really kind of in between these two areas for those that are wanting to set up straddles or something. This is a very, very great range if we're able to keep this area by the pre-market and in the open. With that said, the 10 mile has been slowly creeping upward and it is causing further consolidating within our, I want to say, medium range to long range moving averages. And as you could see, the 20 mile is pulling down towards the 50 mile. The 10 mile is pulling upward towards the 50 mile and towards the 20 mile. And currently we have the 5 mile above all of our supports. That's very, very bullish for the 5 mile. However, again, I just want to really, really reiterate this is that when you have all the moving averages consolidate very heavily and basically collapse onto each other, that's when you get a very big move that shifts, the moving averages into the next trend, whether it's going to be continued downtrend or pulling up above the 20 MA, seeing our 10 MA pull above it, seeing the 20 MA starting to pull above the 50 MA, and continuing the upside trend. So just be aware of that when the moving averages are extremely close, the 5 mile being above this range doesn't mean a whole lot because all it takes is basically a very quick sell-off, and 1 or 2 sessions after that, you'll see the 5 mile below all of those moving averages, and then all of a sudden you have the 10 mile coming back down, you have the 20 mile pulling under the 50 mile, and things look like you're stuck in the middle of the woods, basically right in the bear cave. Um, just be very aware of that. This is kind of a very contentious area. It's a very great area to be setting up straddles. I mentioned that back when we were at the 20 mile, and that would have been a whole $10 move for everyone who took that opportunity. Now, with that said, if we're starting to look at the upper Bollinger again, um, I don't want to cover the upper Bollinger mechanics in this video. However, we have some very, very key data in the morning, okay? And the potential that we could have a massive buy to the upside is, I think, fairly real, okay? So if we get a huge, huge, huge rally tomorrow, and we move up to the upper Bollinger. Again, what you're looking for is the upper Bollinger on the daily time frame to be closed at or above. Okay, it has to be at or above that level for it to be considered the upper Bollinger day one. That's pretty much all I'm going to discuss about it. If we get the move, we will go over the whole upper Bollinger mechanics again, but I don't really want to do that right now if we aren't there yet. So really, again, we're looking at the upper Bollinger at this point, and we're looking at the 20 mile. Be very cautious around this 5 mile range, and you really need to be watching the VVIX during the next 1 to 2 trading sessions, even though you should be watching it every single trading session. And I'm going to turn off the Bollingers and the moving averages for a moment, but this is the VVIX, and again, this is not the VIX. This is the VIX volatility. This basically monitors when the VIX is actually buying or selling. Okay, and that's the VIX futures, not the actual VIX symbol itself. It's the actual volatility futures behind the VIX. So very, very, very accurate way to determine if volatility is being bought or not. Okay. If volatility is being bought, okay, and remember volatility is basically an insurance to your upside when you're a large dealer. Um, that means that the VVIX will be pulling up very dramatically. And you can see, again, you could see this go from $130 all the way to $80 within a day. You can see it go from $90 to $150 all in a day. It moves very, very quickly and very drastically. But what's very, very key to remember is that the selling really doesn't start until this hits $98 or above. Okay. When we're sitting at this 91 to 93 range, it's basically just chopping. Now, yes, it looks like somewhat buying on the SPY and everything, but in terms of volatility buying, that's just chop. Okay. When you drop below the 88 range, that's when it really starts to suggest that people aren't buying the insurance at all, and that the upside is basically open for business, and that buying in terms of the SPY, tech, and everything is good to go. So it's an extremely good tool. I mention it all the time. It it should be on everybody's watch list. Um, why I'm bringing this up is you should be watching this very closely when we're at some of these very important moving averages. So, for example, when we are at the 5 mile like we are right now, you should be watching the VVIX like a hawk so that if we are going to be seeing the buying to the upside, then you're going to be seeing the VVIX pulling down very, very aggressively. Okay. If we're going to be seeing a massive rejection down to the 20 MA, then you're going to be seeing a ton of buying within the VVIX, okay? Um, Simple as that. Just be very aware of these two ranges. Now, I am turning off the Bollingers and the moving averages, and I am going to the 4-hour time frame. You're welcome to follow me on the hourly time frame. Uh, I just don't pull up the hourly on the computer because it doesn't show very well. Um, let's see what we're going on here. I want to pull up the daily chart really quick just so that everyone can very quickly see what we have going on. The orange is a major buying channel. The blue is a major selling channel. These white channels are consolidation channels. So this is the upper consolidation channel, lower consolidation channel, and then the dotted lines right here is another consolidation channel itself, the upper and the lower. Okay. The red line right here was just a major support line we've been looking at the bottom of our selling channel. We don't need it anymore. But anyway, going over the 4-hour time frame, it looks like we have a very strong cup and handle formed here. Okay, and that is a bullish structure. A cup and handle heavily anticipates and suggests that we're going to pull upward. Okay, now we are still within the selling channel. I know it doesn't look like it to the T, but we are. We're still very much within the selling channel currently. If we have a major rejection here, then we should very, very, very likely expect a rejection all the way down towards the 650 over, a period of few trading sessions. Because that would, we're within the selling channel still. Okay. As long as we're within the selling channel, when we get to the top of a selling channel, the full expectation should be to pull downward. The first range would be pulling down to the top of the first consolidation channel, and we will discuss that move if we have that move. But we have to be careful of a bounce upward from that range because that can be turned into a major range for support. Okay, but the expectation should be that if we have a rejection at the top of this channel, we generally trade from the bottom of the channel to the top, back to the bottom. So with that expectation, we still have that purple arrow to suggest we will close this very large inverse cup. Okay. Now, again, with the bullish cup here, this is telling us it wants to break out of this channel. So again, I discussed this over the last couple videos that this triangle right here, this little range right here was a major, major battle, uh, basically a battle zone, a battlefield war, whatever you want to call it, between the bulls and the bears to really decide on which way are we going? Are we going to reclaim this buying channel and continue this rally, or are we going to continue the selling and, seeing people taking profit into the new year? It should be decided very likely in tomorrow's trading session. Again, we have some very, very, very key data. It is very dovish data for the most part. So with many of the bulls, you know, correlating dovish data to bullishness, we just have to be very, very, very careful. Okay. Um, with that said, again, watch that 5 mile range and it will tell you exactly where we're going to go in which channel. If we take the buying channel, we will extend it to this bottom support, and essentially we continue up into the channel. If we reject, then again, look to break into the major consolidation channel here and look to continue to sell off. So that's the SPY TA. Let's go ahead and quickly go over Bitcoin. And very quickly going over Bitcoin, this is the weekly time frame. So I'm just kind of showing all the different structures we have been looking at. We were looking at this potentially forming another leg downward to the downside. However, this is turning into potentially a very, very strong double bottom. And I'm just going to take this support right there and drag it right there. And we could delete this one. And this double bottom can potentially be extremely, extremely strong. It could be all the liquidity necessary to pull us back up into the top side of this selling channel. I could actually grab the correct lines. Now, again, the bearish thesis here is that the dollar is still at an elevated range. Okay, and with it being at an elevated range, that potentially we can still see a lot of weight lost from Bitcoin. Now, with that said, we did see the bearish microstructure here rejected. Okay, we were looking for an inverse cup. Well, that was completely rejected. Okay. Um, that inverse cup so far again is turned into a very, very strong double bottom. Double bottoms are one of the largest breakout uh, structures and patterns you can really look for. It's really one that catches many off guard, and it's caught me off guard many times because it looks very bearish. It looks like it wants to turn into that inverse cup, that inverse cup's handle. But all of a sudden we get a pull, we get a move upward, and then all of a sudden we're buying and all the bearish positions are basically taken over. Um, be very cautious of trying to short Bitcoin right now when we have this double bottom. Okay. We did not have the move downward, and with this canceling out that prior bearish structure, um, I'd be extremely, extremely cautious here. Okay. What you need to be watching for on Bitcoin, and I did swap this to the daily time frame. I just want everyone to be aware of that. So I'm going to turn off the drawings, but we're going to swap to the DXY is you need to watch the DXY. Now, currently, we are seeing a little bit of bearish structure within, forming here. Is that potentially we can have this inverse cup and the handle pushing us down further. Okay. However, this has not fully been identified as bearish liquidity. This can still pull upward and turn into an inverse um, head and shoulders, or even as we were just discussing on Bitcoin, a double bottom and pull back upward, fill this cup back up to the 100 range, and then again, we would be selling off in the equities, selling off within Bitcoin and everything else. So really for Bitcoin, you need to be watching the dollar. That's going to be telling you exactly what's happening with Bitcoin. And the reason why we're always watching Bitcoin is because truly Bitcoin is the overall market trend. Um, Compared to something like the SPY or something like that. Bitcoin is so institutionally controlled, it's so controlled by government entities and everything that it's not really a decentralized currency anymore, as everyone created it for. So it's really a centralized currency that all big money owns. Um, with that said, are they going to allow this to continue pulling downward? I'm not so sure. Um, But we do have to respect whatever trend they set. So if you see a lot of buying entering into Bitcoin, you can almost guarantee that you're going to be seeing a lot of buying entering into the SPY, which means a lot of money entering into tech, into some of these higher symbols on the mag, everything else like that. So be very cautious of the dollar over the next few sessions, especially when we're getting some of these really, really big data sets. Now, going into treasuries. All right, and this is the TLT daily chart. Just for reference, very quickly, we've had this major cup to the upside, and from the top of the cup, we had a rejection. Okay, we anticipated this rejection, we fully expected this rejection. However, it's starting to become a little sketchy, okay, because some of our bullish structure has been invalidated. Okay, we were looking for this to turn into a bullish cup and handle to the upside, but that did not occur. Um, Now we currently have an inverse cup formed here. Okay. And not only do we have an inverse cup formed there, but we have the previous larger inverse cup. So we have the inverse cup and the handle formed. Okay, so that does suggest downside. Um, there was a major move down today, and we got down to the 88.46. I basically bought the heck out of it when it was at the 88 47 to the 88.51. I was buying all sorts of contracts, TLTW, TLT shares, um, really entering a lot of positions like that because remember, with this consolidation channel, I have not adjusted it for the dividend. With the dividend adjustment, we are still within this consolidation channel. We have not pulled out of this consolidation channel yet. Okay, and because we have not pulled out of this consolidation channel, that means we still have a very large potential to be heading to the upside. And with that said, we've been discussing double bottoms here, and potentially what we have here is a very strong double bottom. Okay. Um, that would give us all the liquidity necessary back for the 92. And with a lot of tomorrow's data sets being extremely dovish, um, the potential is very, very high to start seeing this buying up again. Um, Again, we need to be concerned about the range. And of course, it's not letting me adjust that. I'm going to color this red in a moment, but we really need to be concerned about breaking into this range. Because if we break into that range, that's when we really will get the bottom of that buying channel. And from the bottom of that buying channel, that's when we can then look for the major support to the upside. Because again, once you head to the bottom of a buying channel, the expectation should be to, buy the bottom of that channel and bounce upward. So, um, that's TLT, but I want to show the US 10-year currently. Is that we had it pull up quite a bit today, and I want to go to a 1-day time frame. That's not what I want it to look like. I want it to look like that. Okay, so it pulled up quite a bit today. Um, However, ever since pulling up, and this was pulled up on no data. There was not a data set at this 8 a.m. time frame that I know of. Um, since pulling up, it dropped all the way back down. Okay, and it is currently, let's see, I want to go to a one time frame. Um, see, this was back. Yeah, so we're seeing, what am I trying to say here? We're seeing a tapering at the top of this. Okay. If I could draw on this, this would be a very, very obvious head and shoulders. We also have a head and shoulders within there. With all the data sets being, extremely dovish, very likely tomorrow, the yields should pull down very, very aggressively. And what I'm really looking at is this first gap at the 3.992%. Um, it should continue the trend. And again, let me pull up the 5-year trend. If I could draw the actual trend line on this, this would be a very, very strong downtrend. Um, a little bit of consolidation in this range, but it's still within a strong downtrend. And as long as we're not starting to reclaim some of these prior areas, like if we pull back up to the 4.154% or that 1.76%, I believe it was, area that I mentioned before, then we should still be absolutely fine. All the data still supports that we should be seeing the yields drop pretty dramatically. We have, again, many Fed members that are very, very dovish, and everything looks very good in terms of the overall structure. Again, this is still a very bullish structure. We have been in a very long consolidation range, but if we can break this range, we have pretty much nothing but upside. Okay. They did end quantitative tightening as of yesterday. So we should see that playing an effect in the treasury market fairly soon here. I know some say they don't really expect QT ending to really do anything for the market because of the QT amounts, but these 25 to 50 billion auctions still matter. Okay. That's still real money at the end of the day. It's not leverage, it's not anything else. It's actual dollars that take collateral behind it. So, um, it has a lot more weight than any of these other instruments and securities overall. So that's my piece on TLT. I do still see the bull thesis. I have not been shaken out of positions. I absolutely loaded the boat today in terms of adding calls. And I added quite a bit of the December 31st 90 calls. Currently they are up 15%, which is awesome because TLT has been really, really difficult over the last few months. Um, with those being up, I also have added to the March 96 calls. Because with that move downward, we did have a dip. I believe they went down to uh, $51 or $53 today, but I did buy those up as well and have added to those. So while those positions aren't green, they are very, very close to neutral. So if we can get our upside, we should be good to go. It's just we're in a very contentious area, but all of the current data really does support what we're expecting. And hearing Powell speak yesterday about Volger and this other economist. I apologize, I don't know his name right now. Powell really wants to jump into the boat of having a recession. Okay. Um, he really wants to be on the right end of history, and he wants to be on the right end of economic policy, and he wants to make the right decision. He was very, very emphatic about that point that what Volcker did to cause a recession was the correct decision to make. So, with a Fed currently led with someone with that mindset, even if the Fed chair seat will be changed in May, um, a lot of that sentiment is still going to be pushed through these other Fed members. So, we'll see how it turns out. So far, I'm not shaking in my boots yet. The dip today was rather unexpected, but I did buy it up, and looking to the upside. I still very, very set on this bull thesis. I think we are going to nail this, but time will tell. Um, Let me very, very quickly go over Apple and taking a extremely quick look at Apple. Okay, just want to take a look at their daily time. Very nice bounce. You have a very nice cup created. Horizontal ray on that, just so that I can mark it out. And from the top of that cup, you have a handle right there. Very strong handle. You have a little bit of consolidation, and you are currently within, it looks like day two of an upper Bollinger move. And this is somewhat of an extended upper Bollinger move. It's not exactly fully extended because you did come down, you did have a 5 mod test. You could see as of yesterday's session, you did have that 5 mile test. I bet if I go to the 4-hour chart, yep, it's right in there. Um, so that would have been Friday's session, early Monday, pre-market. Yeah, you guys had that 5 mile test. So with the day two upper Bollinger move, and I do want to double check to make sure that you closed on the upper Bollinger as of the prior session. You did? Okay, so this is upper Bollinger day two. What happens with upper Bollinger day two is generally on the second day of the upper Bollinger is when you want to short. Okay, and the reason why is that's generally the range to short is when you enter the upper Bollinger, and this is for any upper Bollinger without looking or understanding the mechanics, you can tell that anytime the upper Bollinger is pushed into, what happens? Generally selling, okay, or consolidation. Selling, consolidation, massive selling, massive selling, selling. So, what does that really tell you? That means that when you get to the upper Bollinger, that's when you want to be in a position of a short, okay? Now, we have tested the 20 mall as of basically 2 weeks ago, so we're not really due for a 20 mall test anytime soon. You're still expecting about a month out on that 20 mall. With the upper Bollinger day two, with the 5 mall being tested, what you should really be anticipating is that very likely you're going to be seeing this selling down to the 5 mall, and from that 5 mall, very likely pulling down and consolidating towards the 10 mall. Okay. From that 10 mall consolidation, if you don't pull down to the 20 mall, I would say the extreme likelihood of a bounce right back up to the upper Bollinger would be very, 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 very high. Okay. And your ADL, which this is the basically the determines the buying and selling. This shows if money is moving into the fund or out of the fund. So if this is pulling down, money is being withdrawn from the fund or the symbol. If this is pulling up, then money is being pushed in. Well, you have a lot of money being pushed into this right now. So the real full expectation should be expect a move downward to this 5 mall. This 5 mall will be pulling upward towards you guys. But you're very extended over the upper Bollinger. Okay, so that is a bearish sign, but nothing about this tells me that this is bearish. Okay, other than having a very, very minor support test. You don't have to do a 20 mall support test because you've had that consolidation already. You don't need to do that for essentially a whole nother basically 2 to 4 weeks. Um, really look for that 10 mall range and look for the upper Bollinger to expand further from that 10 mall range and potentially the 20 mall range. Those are very, very, very prime times to enter positions for further upside because this looks extremely, extremely primed for it. So that is the entire technical analysis for tonight. Thank you all for listening. I appreciate everyone who, supports, subscribes, everything else. I'm almost at 1,000 subscribers, which means that I can finally get paid from the videos, which would help a little bit. I have been dealing with a lot of physical issues, and as I've described, it's made it very, very hard to navigate a lot of trades during the intraday. It's made me had to really just enter a lot of long positions, and a lot of these long positions I'm trying to take safer positions on, so they're really slow movers. Um, yeah, so every bit of support really does help right now. I heavily appreciate it, and I thank you all. With that said, I hope everyone has a wonderful day tomorrow. I hope everyone trades safe and expect a lot of movement from tomorrow's data. As I said, Wednesday and Friday this week are huge data days. Um, Yeah, have a great day, and I will talk to you in tomorrow night's video. Take care, everybody.